Hey everybody, this is Jose Blasco here. We're about to start, 30 seconds to be precise. So let's use those 30 seconds for a sound check. Please go ahead, if you hear my voice, type anything. Just a quick hello would do. A quick hello on the chat box would let me know that you hear my voice and technology is ready for us. So sound check, please. Thank you so much. Very nice, very nice. Nice to see you, Ifan. Nice to see you, Ruben. How are you, Ruben? Very nice. Cool. So we just arrived to the top of the hour. And it's time to begin the session. Okay, so here I am maximizing our presentation slide so we can introduce the session properly and begin the day. Okay, the market will open in 30 minutes. So let's get organized. Let's look for market opportunities so we can execute them properly. Okay, let's begin. Welcome to the session, everyone. Today is October 3rd, 2019. My name is Jose Blasco. I will be your guide. And today I am guiding you in our get together session. I am guiding you in the world of longer term trading. For the ones of you that are new and attending this session for the first time, longer term trading means anything above and beyond intraday trading. So today we are not looking for opportunities to be in and out during the day. We are looking at anything above that. Typically, we use options because of the several advantages provided by options. So if you are new to options, please bear with me because the session will be in the advanced side. For sure, we have the sharpening sessions where we go over a lot of options material. And if you haven't reviewed all of that yet, I would strongly recommend you that you do. So that way, quickly we end up speaking the same language and therefore working in a way where we fully understand each other and we can take advantage of the market opportunities, okay? If you already understand options trading and so on, so today we're going to be exploring directional trades to the long side and also the short side, and we will also be exploring non-directional trades, either neutral or purely non-directional, to take advantage of high premiums that are available in the market as we speak. One last thought before I read the disclaimer and we begin is that, of course, my assumption will be that every single trade I plan, you need it, okay, and you're gonna take it. That would be my assumption, which may not be the case at all, because we went over the sharpening sessions, we went over portfolio management, which means that at all times a portfolio should be properly exposed and properly positioned. And some of you may have already a bunch of shorts, or some of you may have already a bunch of longs, or some of you may have already multiple non-directional trades. And in that sense, it would not be time to add some of the trades I may plan because you already have too many longs or too many shorts or too many non-directional trades. Okay, so my assumption will be that every trade I plan, you need it, but of course, based on what we learn in the portfolio management session, you will need to conclude yourself if the trades that I am exposing you to are to be taken or are not to be taken. Okay, also the size of those trades, or the fact that you may execute those trades with real money or paper money. Obviously that certainly is going to be your decision depending on your preferences and where you are at in your trading process. Okay, Wayne, how are you? Very nice to see you, Wayne. Very nice as well to see you, Prahakara. Very nice, everybody. So let's begin. The disclaimer: the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for demonstration, purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. And this is the end of the disclaimer, and therefore here we go. What a beautiful trade station, what a beautiful chart with the VIX going up, the VIX now hitting the 20 mark, 20.16 to be precise. Beautiful flashy UFOs on our screen that help us understand better the markets. Okay, and on top of all of this, also a beautiful scanner here on the left side of the screen where we are running multiple scans, and normally in sessions such as today when we do longer term trading, we focus on the bottom part of the scan where we have the two type of trades that the scanner has identified on the top are directional trades to the long side or the short side. The bottom ones are neutral trades to the long side or the short side, and then here in the middle, pure non-directional opportunities. Okay, the three on the bottom are all what we call credit trades. So it's all about selling options, collecting premium, and waiting for time to pass. Where the ones on the top are debit trades, which means that is all about buying options, paying for them, and it's all about catching moves, okay? And that's how you profit. A move needs to happen. If not, you don't profit. So we're going to be exploring all those 5 scenarios. Normally, the scenarios that we explore the most would be directional long and short, as well as non-directional. Somehow it's probably easier to trade this way, being a little more specific, being long, short, or purely non-directional. But many times we've seen cases where non-directional trades were not fitting our rules, and then we also open the door for neutral trades, okay, which are kind of non-directional, but there is a little bit of a bias to the upside or the downside. Okay, so a little bit of a summary of what is here. Of course, many of you already knew that, okay, but for the ones watching this for the first time or recorded as well, just so you are focused on what I am about to do. Supply and demand trader, very nice to see you. Why? Wow, lots of premium. You are absolutely right. And Wayne, you have 20 plus trade room participants watching this morning. That's fantastic. Welcome all to the session, my friends. It's a pleasure to have you, and certainly you are in an amazing company. And when I introduced the session, I said I'll be your guide. Well, what a guide you have with Wayne there. Okay, so very nice, very nice. Very delighted that we are all in the same team, and I love the teamwork, as I always say. So anyway, let's begin with the session, okay? And we're gonna start with the non-directional trades, okay? So when looking at non-directional trades, of course, we have a collection of stocks here. To be precise, we got 9 opportunities the scanner has identified as potential trades that could be good candidates for non-directional trades. The first thing we need to do, as I always say, is we need to be a little skeptical. And in this sense, what I mean by skeptical in this sense is always wonder, so why is it that those 9 stock got very highly priced options? So why is it that those options are overpriced? Why is it that there is so much premium? Putting on the side that the VIX went up pretty nicely, and therefore there is plenty of premium built in those stocks, the market I meant to say, but those particular 9 stock happens to be even above and beyond what could be considered as a normal case. Okay, and that was identified by the scanner. So we need to be a little skeptical, because one of the reasons why this may be the case is because those stocks may be about or close to reporting earnings. And if that was to be the case, we may get a gap against us, and having a gap against you is absolutely the complete opposite. It's the complete opposite concept to being trading non-directionally. A gap is a major move, and when you trade non-directionally, you don't want major moves in any direction. You want the market to stay as quiet as possible. In other words, we need to make sure the stocks are not about to report earnings. If that was to be the case, we would consider this trade as invalid. So I'm just typing Costco as a symbol, and notice how Costco report earnings on October 3, which happens to be today. Well, obviously, it's no way we're going to plan a trade on Costco, knowing that this gap risk out of earnings is right there. Okay, it's around the corner. So therefore, I'm going to go for the next one, which is Disney. Okay, and see if Disney it's a better candidate from the point of view of the date for earnings. In the case of Disney, notice how wait a minute, I'm not sure. Yes, I did it right. So in the case of Walt Disney, notice how we're having earnings reporting on November 8th, November 6th as well. So let's call it November 6th. And when looking at the calendar, of course, we are now in October 3rd. Next Friday is tomorrow, October 4th. The next Friday will be the 11th, and then the 18th, and then the 25th. So we have many different Fridays that we can use as expiration dates in that stock, in this case Disney, which is a stock that does enjoy, we do enjoy as traders, very highly priced options for Disney, while there is no earnings risk anywhere close by until we get to November 6th. Therefore, it would be time to load Option Station Pro and begin assessing if we're gonna find a potential trade that makes sense on Disney. When trading purely non-directionally, we normally use iron condors, okay? Because iron condors allows you to manage the risk no matter what. You get double the premium because you are doing both sides of the trade, the call side and the put side. And also they allow you for repair, okay? For example, I can see that Option Station Pro right now is loading UNP as a symbol. We have discussed something that I call a damage control mode, right? Sometimes a trade does not behave as expected, and therefore we need to switch our trading mode to damage control. And we have been learning in the sharpening sessions how to take an iron condor and butterfly it to give the trade another chance to hopefully end up in a profitable situation, or at least reduce the risk. Okay, and UNP would be one of those trades where you will want to approach it this way, because UNP has surpassed the range we expected when we planned an iron condor. I think it was in the middle of last week or the week before. Okay, and this of course has a lot to do with the major moves that we have seen in the markets. Okay, that were not expected based on probabilities, but that happens, and therefore it would be time to butterfly that iron condor. Okay, but in this case we are now building a new trade with Disney, so I'm just loading Disney. And since we discussed in our session that for non-directional trading purposes, the shorter time to expiration, the better. Okay, so I'm gonna start with October 11, because certainly October 4th is sooner, but I don't think we're gonna get that much premium there because it's only one day. So I'm gonna start with October 11, and without even thinking, I'm gonna right click to analyze and sell, add an iron condor, so I can move into my analysis tab, change what comes by default with restriction, which is minus 5% and plus 5%, and I'm gonna change it to plus 1 standard deviation and minus 1 standard deviation. And this tells me that from now until October 11, if everything was to be, let's call it normal, Disney could certainly easily range between 124 something to 133 something. So by keeping those values in mind, 124 something and 133 something, I'm gonna go back to my chart, okay, and look at the 124 something, 124.43, something like that. And I'm gonna also look at the 133 something, which is gonna be somewhere here. Okay, and by looking at that, okay, it is obvious that we would need to find UFOs above and below those levels, because the purple lines kind of represent where Disney should be in a normal case. But we don't want to sell options where price is likely to go. We want to sell options where price is not likely to go, and therefore we need to be above and beyond the purple lines, and certainly leaning against UFOs that are further away from those purple lines, such as the UFO I'm pointing now. But before I do that, I also need to look at my statistics, which currently is 51%. That is with regular session data. I want to move this to pre and post market. Okay, so we see what is more powerful, and notice how Disney actually got 61% pre and post market, which that's the power of AutoUFOs somehow, where now we are being revealed something that most people don't realize trading using other techniques, which is how those large market players are actually trading that stock. And it seems that actually the heaviest orders that they place in the market, and the ones that they leave in there, and they don't cancel those orders in case they didn't get filled in a complete manner, are the orders that are actually they place during pre and post market hours, instead of the one during market times. I'm not saying the one during market times are not relevant, but certainly 61% is actually a statistic that we don't see too often in the world of stocks. In the world of 24-hour markets, such as futures or forex, we do, but not in the world of stocks. Okay, so I'm gonna load more data. Okay, I need to go ahead and I need to see how far in time I need to go to get more data there. So that would be like February. So I'll go to the beginning of the year. So 55 minutes. I will now move into January 1st, 2019. Okay, and let's load a little more data. So we'll get to see some green UFOs below. Here we go. So we got green UFOs below and red UFOs above. Okay. So a message here on the chat box as well. So why the 55-minute chart instead of the 60? Just curious. Yes, Sonny Hong, we have conducted sessions in the sharpening sessions where we talk about something that we call the edge timeframes. I would recommend you to watch, even though today we are doing longer term trading, I would certainly recommend you to watch 4 videos that we have recorded in the YouTube channel under sharpening that are named such as intraday 1, intraday 2, intraday 3, intraday 4. Even though today we are not doing intraday, I would recommend you to watch those videos because we talk about the concept of edge timeframes. And just to give you a quick explanation about it, edge timeframes are timeframes that are being used by the institutions and the large market players. Markets became electronic 3 decades ago or more than that. So it's not like people are going to be drawing lines on the chart manually or placing orders on the chart out of a 3-hour meeting. Certainly they could do that, but also the large market players, they are trading with computers very intensively many times a day. And those computers are normally using Fibonacci time frames, okay? So 55 is a Fibonacci number, okay? So that's why it gives you an edge, okay? And again, this is the short answer to your question because today is not a sharpening day, okay? I need to keep going. But a very, very important question, the one you just asked, okay? So what do we have here, okay? So we have a UFO. Notice how the inner circle is outside the UFO band. Okay, this is a rare case, but this happens when the app, identifies what I would call a little bit of a contradiction when doing the market analysis, and the app identifies traces of on-field orders based on certain parameters such as volume or ticks, and the app also identifies on-field orders based on other techniques such as price movement, volatility moves and stuff like that. And, it's a little bit of a contradiction. In most cases, you have this overlapping inner circle and the band, in the sense that the app is identifying confirmation of the location of the orders. But when you see the circle outside, is because we are not having this full confirmation. So every time you see a scenario like that, which by the way is quite rare, this UFO represents way less probability, okay? It's less recommended if you wish to trade that UFO, okay? So in other words, if I was to use one of the UFOs based on what we have, I would be dealing with the UFO below, which is 116. Okay. Now, if I was to measure the distance from the current price, which is 129 to 116, it's quite far. Okay, it's quite far. So now, if I was to project this to the upside, okay, if I was to project it to the upside, okay, so this goes all the way to that UFO on the top at 143, and therefore my line should be located at 143. In other words, the perfect iron condor would be an iron condor where you would be selling calls above 143 and selling puts below 116. Now, of course, I would love to do this with October 11. I would really love it. Okay, but I doubt, even the 148 is already paying me only 4 cents. Of course, those zones in the chart are so far away that for sure I need to go further out in time to get more premium. So if I do October 18, I get a little more. If I do October 25, let me have more strikes because I need more, isn't it? I need to find 143. So I'm getting paid, only 10 cents with October 25. It's okay. I can keep going as long as I don't surpass November 6, isn't it? So I'm going to try November 1st. If I do November 1st, I got 21. It's not enough. Okay. And the next one would be November 8, which unfortunately we cannot use. Okay. So, hey, you know what? We just did the whole analysis. Okay. But unfortunately, we do not have a proper setup with Disney because the location of the UFO we need to use for this trade happens to be too far out, and therefore the premium collected is too low. Okay, so Shame, because we spent some time here, but the end result is this is not a valid trade. So we're gonna continue working on the list, okay? Starting with IBM and keep going down, okay? Now I'm looking at the clock. We are 11 minutes from the market open. In other words, in 1 minute, TradeStation will reset the option chain. So 1 minute from now, I will not be able to look at the option chain. And therefore, what I'm going to do to not to waste our time and be efficient with the session, I will remember that Costco and Disney are the two ones that we have already seen. I'll come back later and begin looking at opportunities from IBM going down. But what I'm going to do now is move to the directional trades to see if the chart setup, I got 10 minutes to look at chart setups to see if some directional trades are valid and basically confirm if I do have an opportunity or not. And then 10 minutes from now, the market will open, option chain will refresh, and then I will again go back to planning and looking at those options in the option chains, do my simulations and fine tune those trades. Okay, so right now we are only working on the charts for the next 10 minutes. And therefore, I'm focusing now on directional trades. So directional trades, of course, the app has only identified four opportunities. I meant to say TradeStation. Why is that? Well, easy. I mean, if you look at S&P, okay, so what's the climate? Okay, it's a very intense red at this moment in time. It's massive price movement to the downside, okay? So remember, stocks are fragile. They are amazing markets to trade, but they are fragile in the sense that they depend on many other external forces, such as the market sector, such as the overall broad markets, etc., etc. So what's going on here? Well, going on here is that the S&P is pushing down very heavily. So you're not going to find too many stocks that got a blue climate. Most of the stocks will have a ruby climate in the marketplace because of what's happening in the marketplace, right? So FL, okay, Foot Locker, it's one of the rare cases where we do have that type of setup, okay? So may be worth it to take a look to see if the chart gives us an opportunity, because if the S&P was to turn and go back up and you were to enter a trade with a stock that is already in an up climate, in other words, that stock is showing relative strength compared to the broad markets. So probably you end up experiencing a very, very powerful push to the upside. Okay, so certainly time to look at that stock. Now, what do we have when looking at that stock? Well, when loading pre and post market data, problem is that it's showing us a 35%. So certainly we cannot take a trade like that. Let's switch to regular session, and it's giving us 49.7. So you know what? We are not going to take it either. Okay, we are not going to take it either. We made it a rule that when being directional, we need to be above 50%. For non-directional trades, then we said it could be okay, 49, 48, let's take it. But for directional trades, we have to be above 50%. And you can see, again, we are seeing behind the scenes, thanks to the AutoUFOs, isn't it? So behind the scenes, what's going on is that when the institutions that trade Foot Locker place an order and they don't get filled, next thing you know, they cancel it. And then if price was to come back to one of those zones, you would have a less powerful or no reaction. Okay, and we are not going to do that when being directional. When being non-directional could be okay, but certainly not when being directional. Okay, so we're going to move to the next one, which is Papa John's. Okay, Papa John's being in an up climate. Okay, right now it shows 16. Okay, but it's because it's still pending data, PD. Okay, so we're just going to wait a little bit. Okay, let's talk about the climate first. Okay. You have 53, okay, Ruben, that may mean that you have loaded a different amount of candles compared to the amount of candles I have. Okay, the amount of candles I have is 1,597. So if you were to have the same amount of candles, and also you were to use the same settings I use for the UFOs, which is 0.618, then you should have the same result as me. Okay, which, by the way, doesn't mean you need to use the same settings I use, because you may have a different level of risk aversion. We are all different, and we did conduct sessions on sharpening where we talked about calibration, and we talked about, the different choices for calibration and why. So if you were to watch the session, you will know why I use 61.8. Okay, but it could be absolutely 100% okay for you to use 0.5. Okay, so no problem with that. Let's see. Questions, comments. Dirk, nice to see you, my friend. Yeah, late is better than never. No worries. So Papa John's showing 56% with regular session. What about pre-post market? Let's take a look. Pre-post market 43. So with Papa John's, we're gonna go with regular. Okay, and let's talk about climate here. What do we have? We have 3 candles into the climate. When that market goes up, it lasts 5.69, which is more than 3. So in other words, this is a sensible idea to enter a trade to the long side, as long as we have UFOs lining up with 51.92, which is the current value for the average, which, by the way, will update in 5 minutes when the market opens. Okay, but remember, we don't need to be too precise. And guess what? We do have 2 UFOs overlapping each other with a starting point of 51.99, which is certainly a very nicely coinciding 51.92. So my friends, we found a trade. Okay, we found a trade. So next step, let's plan for the target. So now that we found a valid trade with the climate and the UFOs, so we're gonna go for the target, okay? And because it's a confirmed climate, thick blue dot, which, by the way, you don't even need to think about it because the scanner is giving you confirmed climates, right? So what we're gonna do is we need to change to the next common time frame, which is from daily, we're gonna move to weekly. And once you do that, we will now activate AutoUFOs and look at where is the next red UFO. So the next red UFO is located at 56.10. So 56.10 would be the next, not the next, but would be the target for Papa John's in this trade that we are putting together. Okay, so here we go. So we have a trade with Papa John's. I will complete this trade in a minute when the market opens, because of course now I need to look at the option chain and put the trade in place. Okay, SDS, that's an ETF, so I will skip it. You could certainly trade ETFs, okay, but I will just not do it because those markets normally move more slowly, and I understand in this room we like volatility. Control volatility for sure, but we like control volatility, especially because my assumption is that you are putting together a portfolio with multiple trades running at the same time, where some of your trades are long, some of your trades are short, so you have a little bit of a hedging component in your portfolio. This is offsetting risk, and therefore volatile markets will do better for you. Okay, we also have VMware. Okay, so VMware 53% probability with with a regular session. Pre and post market will give us 44%, so no good. We'll go for the regular session, which is 53%. Okay, and again, when looking at the climate with VMware, we have 3 dots into the climate, where when it goes up is normally 5. So very similar setup compared to Papa John's. I love the fact that one is a food company, the other one is a tech company, totally different story. So you are adding diversification in your portfolio. If you need those 2 longs, there may be nice longs to get in your portfolio. So we have an average located at 150.92, and we have this UFO at 150.23. It's not exactly overlapping, okay, but it's okay. It's okay, we'll take it. Remember, with stocks, we don't need to be that precise. So I'm gonna go ahead and switch like I did before, switch to the weekly time frame. Okay, switch to the weekly time frame, activate AutoUFOs, and see where the target should be. We are already in a red UFO, so the next target would be the one above, which is 176.03 for VMware. Okay, for VMware. Cool, that's it. So we have it. No AutoUFOs anymore. And okay, so here we go. Perfect. That's it. Okay, so Good. The market will open in less than a minute. Okay, so I will not look into shorts yet. Okay, notice how we got more opportunities to short. We'll take a look at that later on. Why do we have more shorting opportunities? I said it before. The broad markets are in a downtrend, and therefore there are more ruby climates than sapphire color climates at this moment in time. Okay, so 40 seconds to go for the market opening. Okay, and obviously we'll start with VMware, since is the chart that we have already here. So VMW, loading the option chain, and this option chain will be now updating in just a few seconds. Okay, so now of course the first thing I'm going to do with the option chain is to pick an expiration date and build an options trade. The options trade I'm going to build, of course, is going to be a vertical spread. We know that. Okay, but which expiration date do I need to use? Okay, well, that is when we need to calculate the time to target. Okay, so what is the time to target? Well, for VMware, we said the target should be 176.03. The current price of VMware as the market opens, okay, which the market just opened, is 152.47, isn't it? Interesting to see that the market should have opened, but the stock is not updating. Why is it that the stock is not updating on my screen? Let me see. Maybe I got disconnected. I need to reconnect. Okay, so the S&P is updating. So what's happening to VMware? This is quite weird. VMware is not moving. 152.47. VMware is not moving. Okay, now it's moving. 55. Okay. Wow, very slow starting beginning of the day for that stock. Okay, well, that's what it is. Now it's 152.40. So it is moving now. VMware is now alive. Feeling better for VMware. So anyway, so we are calculating the time to target. So again, the distance from entry to target is $23.56. How are you, Ifan? A pleasure to have you join us from Indonesia. That's great. I'm in Singapore, so we're almost neighbors. Once you know the distance from entry to target, what we do, remember, is we activate the daily ATR, so which is 4.57, right? So we can calculate, we can have an estimation of how much time it's going to take for that market to get to our target. And the result is 5.15. And even though this is a daily ATR, so you would expect it to be 5.15 days, we want to give that market wiggle room because markets don't move in a straight line. And we assume a net 1 daily ATR per week. So I'm going to multiply this times 7 because every week got 7 days. Okay, so that would be 36 days. Okay, that would be the amount of time that we would need when it comes to the expiration date for the option that we want to buy. So 36 days, okay, is actually November 8. Okay, so we could use on November 8, but also we have a process by which we look at the earnings reports for VMware, and what we like to do is we like to line up the expiration date that we pick with the earnings report date. That way, we suffer less time decay because of the natural increase of price of the options as earnings approach. So November 27 is certainly more than 36 days. And, you know, we don't have November 27, unfortunately, so then we need to go for November 22, which is the closest we have, okay? So that's it. November 22nd is selected. We're going to analyze and buy a vertical. So I'm adding this into my screen. And what I'm going to do now is two things. First, I'm going to add the price for my target, which is 176.03. That's my target. And then I also need to add the price for my entry, which is, I think it was 150 something, right? So 150.23. Okay, 150.23. That would be the price for my entry. Okay, those are the two price slices that I need. Okay, why is that? Well, because when building our vertical spread, okay, let me make a little space so I can type. When building our vertical spread, we're going to be selling calls, okay? selling calls above the target, okay, and that would be the 176. Okay, so if that was to exist, I'm not sure if the 176 exists. Let's take a look. So option chain, we don't have the 176, we have the 177.5. Okay, so we would take the 177.5, okay, because it's above the target. Okay, and then once we have found that one, then we're gonna buy, okay, a call, okay, located somewhere between entry and target. Okay, that's where it needs to be, and the place really depends on the Greeks. We are shooting for a Greek of around 30, isn't it? So again, we're using November 22nd, 2018 expiration. Okay, that's the expiration date that we're using. So let's take a look. Analysis, and I'm moving efficiently here. Okay, I'm moving fast. Okay, hopefully I'm not losing anyone because today is a trading day, so I'm supposed to move fast. During the sharpening days, I take it easy, but today I'm moving fast. Okay, so hopefully you guys are following. So what do we have? Right, if I do 177 and 157.5, well, 157.5 is certainly above the entry. The entry, remember, actually that's not the entry. The entry would be 150, right? So that would give me 28 delta, which is less than 30. Okay, so what am I gonna do? I'm gonna move it down to 155. And if I move it down to 155, okay, so now it's good in the sense that I got the delta I want. Okay, I got the delta I want. I got 155 is in between 150, which is the entry, and 176, which is the target. Okay, 177.5 is above the target, which is 176. And then I got the delta of 30, which I'm looking for. So this is looking good, but I'm not done yet. What else? Okay, what else are we looking for? We are looking for a gamma to be positive all the time. And gamma is positive at entry, but gamma is negative at the target. Okay, is negative at the target. So what's the problem? Well, the problem is that the 177.5, it's too close. So I'm gonna have to move it to 180. Okay, if I move it to 180, it's still giving me a gamma of almost the same. Okay, well, wait a minute, this raises a flag for me. This should not be like that. Probably it denotes lack of liquidity on those options. So I'm gonna take a look at the 180. Okay, and yeah, you can see. Yeah, you can see from 125 to 55, there is lack of liquidity in those options. Okay, I'm pretty positive. If I go to the 185, my gamma may even be still negative. Still negative. You see that? Okay, so that's not really helping. Okay, so I'm just gonna leave it the way it was. Okay, and what I'm gonna do, that will increase my delta. Okay, but I don't have a choice. I'm gonna have to bring this down to 152.5. Okay, to 150. Yeah, unfortunately, it's weird. I should have an improvement of gamma by doing what I'm doing. But the lack of liquidity, really, it's really not impacting my gamma at all. Okay, so I'm gonna have to take it the way it is, guys, because when doing the simulation and given the lack of liquidity, I'm not finding a way to improve that gamma significantly. Okay, it seems that the best I could see was 180, 155, giving me a delta of 36, which is a little more of what I want. A gamma of 0.83 negative, okay, which is not ideal. I would want it to be positive, or even if it was to be 0, it's fine, but negative is not ideal, okay? But hey, that's what it is, so I'm gonna have to take it like that. Sometimes when stocks are a little less liquid than others, this happens, okay? And let's face it, November 22nd is an expiration date, which is not a monthly expiration date, it's a weekly expiration date. So when a stock is not so liquid and you use a weekly expiration date, sometimes you have this problem. And guess what? We cannot change the markets, so you take it or you leave it, okay? Certainly, we have almost everything okay. The only thing that is not ideal is gamma, but you still got more delta at target than the delta you got at entry, you see, 37, 36. So I will say this is good enough and we're gonna go for it, okay? So placing the order, my friends. So we do 180, 155. So let me rectify it on the chart in case you want to take a screenshot. So 180 and 155. So that's the plan using November 22nd, 2019. Yeah, Ruben, I see your message. I'll take a look at your comment in just a sec. I'm gonna place the order first. Remember, the entry price is 150.23. So I will have, when I place the order, I will need to have an activation rule. Okay, I will need to have an activation rule where I have a price rule, okay, where whenever VMW is at or equal 150.23, okay, then we are, this order is now becoming active, and therefore we are purchasing this bull call spread, which is a vertical spread. So I'm just gonna click place order. The moment I click place order, it gives me a confirmation. I will be assuming at this time you're working with me on that, or maybe you made a few notes and you're placing the order now. If you are placing the order real or simulated, I'd love to know. You don't have to. Remember, everybody in the session have a different portfolio. You may need longs, you may have too many longs, so you may place it or not. You may place it with paper money just to try and practice your skill and see what happens. That's okay too. And if that's the case, please let me know. So, again, I always like to measure the temperature, if you wish, of the room as we are doing this activity together, okay? So I'm just gonna click yes. So the order comes in, okay? And now if I was to look at my manage window, okay, you can see I got a received order with VMW where the order is here, okay? Now, talking about portfolios, okay? My portfolio is the perfect example of a not well-balanced portfolio, okay? Why is that? Because we meet once per week, and in this account, I only put trades once a week. So I basically only have longs, okay? This one is a long trade. This one is a long trade. This one is an Aaron Condor, non-directional, and that one is a long trade. So I got 3 long trades and a non-directional trade. And what happened to the markets in the recent times? Massive crash. So what's happening? The longs are hurting and the non-directional are hurting. Okay, so that's what I meant earlier. If I had a few more positions that were short in my portfolio, okay, I would have maybe a small value, but it would be in the green instead of having a greater value and being in the red. Okay, not a big deal because this account is for demonstration purposes during the one session a week that we conduct. So I'm not bothered if you wish, but again, just to be visual with the comments I made at the beginning of the session with portfolio management, make sure you get the trades you need in your portfolio. If you already have too many longs, don't take this trade, okay? Just make sure you have your delta well balanced as we covered before, okay? Elen, very good. You have the trade in. Very, very good. And now let me take a look at a Ruben question before I go for the next one. So Jose, if you have red UFOs in the 55-minute chart between the entry and the target found in the weekly, do you ignore them? Yes. Yes, and the reason why is because we have a defined climate on a larger time frame. And what happens in a specific climate condition is that if the climate is up, what tends to happen in an up market is that the sell orders tend to be canceled and more buy orders tend to be added. Okay, so you should expect the red UFOs to not to do much. So could you have some, stopping when you get to those UFOs and price drops a little bit and stuff? Yes, but as long as you're in an up climate, price will tend to resume and continue. So in order to maximize your profitability, okay, you could certainly ignore those UFOs on the edge time frame. Remember, the edge time frame is only used for entry purposes. That's it. Okay, good. So let's continue. What else we had? So look, I'm going to look at the other trade that we have with Papa John's. So that way we are done with the longs. Okay, and then I'll go back to non-directional trades. Okay, and we'll continue from there. Okay, so what do we have? Papa John's 5204. I mean, we said that before already. The whole setup is fine. So let's calculate the time to target with Papa John's. You may remember or you may not. I made a note. The target with Papa John was 56.10. That was the target. The current price, I should say the entry price for Papa John's is that green UFO located at 51.99. Okay, so 51.99. 52.99, that is $4.11 away. The average true range for that stock is 1.16 in the daily time frame. So that number, 3.5 times 7, tells us that it's going to take 25 days to get to the target. Okay, that's the estimation, 25 days. So we're going to look at the option chain for Papa John's, PZZA. Okay, and while this is loading, which of course this option chain would suggest to use November 1st, which is more than 25 days, okay? 22 days is less, so we would need to use November 1st, but that's not good enough for us to know. We also need to look at the earnings date, because that would help us to overcome the time decay problem, isn't it? Wait a minute. I just clicked where I didn't have to. Here we go. So what is the earnings date? November 4, okay? November 4, which is gonna be the November 8, okay? So that's the one we're gonna use because November 1st is happening before, so we're gonna go for November 8 in this trade to benefit from that increase of value of options as earnings approach. So we're gonna go ahead and analyze a buyer vertical, and we're gonna do the same process one more time. So I'm just gonna double click on these price slides, type 56.10. I'm gonna click on the next price slides and make it 51.99, which is the entry. So 51.99 is the entry, 56.10 is the target. We're gonna use November 8 expiration. So let me make a few notes on the chart. So we would use calls. Okay, sell calls above 56, so let's call it 57. Okay, so we'll sell the 57 calls, which is above target, right? We would use, I said that a minute ago, we will use November 8, 2019 expiration. And then we need to buy calls, okay? We need to decide which one, okay, which is gonna be between, okay, entry and target. That's the plan. And again, which one? It's all about adjusting delta and gamma. Okay, which earlier we could adjust the delta. We were not so happy about gamma, but that's real trading. Sometimes we cannot. Okay, so let's take a look at that. Okay, so we're gonna move this to 57. Okay, see what happens. And then the price for entry was 52, right? So let's begin with 57.52. 57.52 would give us a delta of 28, so that's not good. I'm gonna have to, I cannot lower this to 51. If I lower it to 51, I get more delta. But remember, my entry is 51.99. In other words, I want my call to be between the entry and the target. So I cannot be below 52. And if I move above 52, such as 52.5, my delta will drop from 28 to 25. Okay, so it seems that that one is locked. It has to be 52. Okay, so how can I get more delta? Well, then I need to push further away the call I sell to 57.5. Here we go. If I do 57.5, my delta is 30. Okay, my delta is 30. And my gamma is positive, but here my gamma is negative. So let's see if I go for 58, what happens to gamma? Well, it's becoming more now. So let me take a look at the option chain. Yeah, again, we are having a lack of liquidity, and this distorts the Greeks, okay? And we cannot see what we cannot see, isn't it? So we cannot see what we cannot see. So 57.5 is giving me a less negative gamma, is giving me a delta at my target, which is slightly higher than the delta at entry. So I'm gonna have to take it, okay? I cannot make up using the 59 because the lack of liquidity distorts the Greeks, and then it would be a made up, or I would be inventing the Greeks I want to see. So that's what it is. And again, this is real trading. I can only work with the data I have. And the data I do see very clearly is that my delta has some improvement. Negative gamma is not ideal, but if the delta has some improvement, you know what? I'll take that. And that's it. So 52 and 57.5 is the way we're gonna do it. Okay, and therefore let me rectify the writing and complete the bottom call. So it's gonna be 52 and 57.5, and that would be the trade. Okay, that would be the trade. So let's go ahead and place an order. Okay, and the same process applies. We need an activation rule based on price. Price for Papa John's. When Papa John's is less or equal than 51.99, go ahead and activate this order, buy the 52 call, and sell the 57.5. Okay, that's the plan. Place order, we get our confirmation window. Okay, you review everything, and if you're happy, you click yes, and the order is in the system. Okay, I'm doing this quickly since I did it earlier a little more slowly. So I believe that probably you guys are defining if this is a trade you want to take or not, and you're working on your end to validate all of that. And you may be placing an order, or you may be not. You may be using paper money, you may be using real money. Of course, all of this would depend of you need this trade in your portfolio or not to balance out your risks. Okay. Anyway, so done with the directionals for now. Let's get into the world of non-directional trading. Earlier we looked at Costco and Disney, didn't work. What about IBM? So first thing to do, as I did before, and guys, I'm moving at a pretty fast pace here, but that's how it goes, okay? So the first thing we said is, hey, take a look at the earnings dates, because maybe the reason for such a premium is that earnings are too close. So with IBM, the earnings are happening on the 17th, and the next Friday is 11, and the next Friday is 18. In other words, if the UFOs and everything else allowed to, we could certainly plan an Iron Condor using October 11. Okay, so let's take a look if that's the case or not. So with regular session data, we got 46%. I'm not happy about that. With pre and post market, what do we get? We got 50. So pre and post market give us an opportunity. Okay, so pre and post market is okay. Okay, so let's see. Okay, let's see with the option chain. What does the option chain suggest when it comes to the distance where those UFOs need to be for us to accept a trade using October 11? So mechanically, without even thinking, I click anywhere on the option chain, analyze, sell, Iron Condor. Okay, I don't even care about the strikes that were here. I only care about the date, and I only care about having 1 and -1 standard deviation. And that tells me that based on that data, simulations and stats suggest that that stock should be moving between 136 and 136 and 146 from now until October 11. Okay, so let's go ahead and draw a few lines. So 146 is here. 136 is here. Okay? Okay, so looking difficult, my friends, looking difficult. Yeah, because, I mean, if I was to use this UFO, okay, which is beyond the 136 mark, okay, then if I was to project this to the upper part, I mean, it's very, very visual, isn't it? I would be surpassing by far the 2 red UFOs I have, right? I would need to go all the way there at least, okay? And I don't have a UFO there. And even if I shrink, it doesn't seem I have much, okay? So in other words, nice green UFO, thank you IBM, but those red UFOs are too close to price, and therefore IBM does not qualify. So let's look for the next one, LQD, that's an ETF. What about Mellanox? We also have now, not sure about how liquid they would be, Qualcomm, Texas Instruments, and Walgreen Boots Alliance, certainly more liquid, okay? But Walgreen is quite low price, so I'll start with Texas Instruments, then I look at Qualcomm, then I look at Walgreen Boots, and then I will look at the other stocks if nothing is good, okay? So what do we have? Texas Instrument, first, we look at the earnings date, TXN, earnings October 23, so we can use October 11 and October 18. That's good. Probabilities 42% with pre-post market. That's not impressive. Regular session, what do we have? 48.88. Not super happy. Okay, I like 50 or more, but remember, for non-directional trades, we'll take it. It's okay. Okay. Now it's only okay if everything else is okay. Okay. So let's go ahead, and first I want to look at where are we at with that stock. Are we making all times high? Yes, we are. So there is nothing above. There is nothing above 132. Yeah, there is nothing above 132. I'm not sure it's gonna work. Let's do it quickly. TXN. If I do October 11, right click, analyze and sell iron condor without even thinking, click anywhere, and I change plus and minus 5 for plus 1 standard deviation, minus 1 standard deviation. That tells me 133, 122, and looking at the chart, 133 is above that red UFO. So that was my impression, that red UFO is too close. So Texas Instrument doesn't work. What about Qualcomm? So let's take a look at Qualcomm. QCOM. How is it going on your end, guys? You've been silent for a while. Give me a little feedback just so I know you guys are good. So November 7 is the earnings for Qualcomm, so that's good. We got 48.78. That's acceptable, not amazing, but acceptable. Pre and post market is giving us 54. That's way better. So we're gonna go with 54. And knowing that 54 is what we get, those UFOs are very far apart from each other. I'm concerned about the premium. So anyway, so let's do it. So we are looking at Qualcomm, isn't it? Qualcomm will begin with October 11 for Qualcomm. Right click anywhere, analyze and sell, iron condor. So that is giving us plus and minus, which is 78.5 and 71. So 78.5 is here. Okay. 71 is here. Okay. So it is obvious that we would need to lean against that UFO and that UFO. Okay. If we were to measure from the current price to the top, okay, and oops, sorry, I meant to disable extend right. So if I was to project this to the bottom, okay, so we are more or less equal distance from the two purple lines. So the trade setup is actually looking very nice. Okay, so now the real question is how much I get paid if I sell the 82s. So let's take a look. If I sell the 82s, I get paid 3 cents with October 11, which is obviously too little. With October 18, the 82s pay me 15 cents, not acceptable. With October 25, the 82s pay me 30 cents, and this is indeed acceptable. Now, we just concluded then that we're gonna use October 25, but, don't forget that, change statistics to October 25 and see what this is giving us now, because now the new value is 81 and 68. So 81 is below 81.71, good. 68 is above 67, good. My friends, we have a trade setup. Okay, we have a trade setup. So what are we gonna do? What are we gonna do? We're gonna buy calls and sell calls above, okay, the purple line. Okay, we're gonna be using October 25, 2019 expiration, knowing that earnings are on, what do we say, November 7. Okay, so that's valid, it's okay. We are using an expiration date that takes place prior to earnings. Okay, and then we're gonna be selling the 67 put and buying some put below. Okay, which I need to define. So let's take a look. Okay, let's take a look. Okay, so option chain. And let's go ahead and sell the 82. The 82 is paying us 30. 30 is more than what we need, remember? Very quick flash here. Rules that we have. Okay, rule that we have. We never sell anything for less than 25. we are shooting for 35. At times, we can go as low as 25. In this case, it's 30. Okay, so we are okay. Now, we are okay only if the 67, I need to add more strikes. We are okay only if the 67 pay us enough. The 67 pay us 55, which is way more than 35, which is the minimum. Okay, so the trade is valid. So let's begin then with the call side, where we're gonna sell, we're gonna buy the 82.5 and sell the 82. And on the put side, we are, was it 67 is ahead? Yes. So in the put side, we are purchasing the 66.5 and selling the 67. Okay. Now, what happens if you do that? Well, what happens, we need to define it in two different ways. First, from the risk point of view. So what's your risk? Your risk is the distance between strikes, okay, which is in both sides is 0.5. Okay, so $0.5 times 100 is $50. Okay, so if $50, okay, if 0.5 is the most you can lose, okay, the rules tell us that we are okay taking 15% of that. Okay, that's the minimum we need to take. So how much is 15% of 50 cents? It's 7 cents. So how much are we being paid? 10 cents, which is more than 7. Okay, so the trade is valid. You can go ahead and do it. What's the issue though? Well, the issue is that every time you do a condor, you get paid $10, and then you have to pay commissions. Okay, so you get very, very little premium net. Again, if you want to have a decent profit, how many contracts do you need to use? It's huge amount. Okay, so I'm not impressed. Therefore, I would like to try something else, which is to increase my risk a little bit from 67 to 66, and also on the call side from 82.5 to 83. Why am I doing that? Well, I'm doing this because normally you have a little better liquidity with the option strikes, which are round numbers, instead of the 0.5. Normally, not always, but most of the times. So if you were to do this, okay, you were to go for 66, 67 and 82, 83, now your risk is $1 in both ends. Okay, the most you can lose is 1. And remember, we said you want to collect at least 15% of 1. So how much is that? 15% of 1, of course, is 15 cents. And how much is this trade paying you? 22, which is double than before, which means that you can have the same premium with half the contracts and therefore paying half the commissions. So is this an amazing trade?
Order filled.
It's not an amazing trade. Okay? And something got filled. Actually, we got filled on the VMware trade. It seems that VMware may have got down and is hitting our UFO. Yeah, VMware is hitting our UFO. So you are in a trade, okay, lining up with the average, right climate, etc., etc. Okay, so good one. If you're in it, that's it. You're in. Okay, but coming back to the non-directional trade, okay, with Qualcomm. Okay, so coming back to this trade, okay, the way to do it will be to use 83, 82 on the upper side and use 67, 66 on the bottom side. But my suggestion for you guys would be to be more demanding. Okay, be more demanding. Even though it seems that you could get 23 cents now, the bid is 46, the ask is 0. You can see there is some lack of liquidity. So be demanding, because market makers may be desperate to get some execution on that stock, because it's not like it's not liquid, but it's not the most liquid in the world, and also we're using a weekly expiration date. So market makers, okay, they may give you a little more. So I would say let's shoot for 25 at least, okay? Less than that, I think makes no sense, and therefore I am placing an order now on my end for 25, okay? So place order, yes, that's it. The order is in the system. Of course, I didn't get filled, because 25 is not available, but it may be later in the day. Especially, it seems that the market is picking up a little bit of speed to the downside. Probably the VIX is going up as we are concluding the session. Yeah, the VIX is up 2.33%. So premium is entering. This UFO may be gone in a minute. Nice reaction to the green UFO. More green UFOs may form. Options may gain more value, and therefore you may get filled on this trade that is showing 22 cents, but you may get the $25 in this trade. Again, it's not an amazing iron condor, but it's valid. It meets the rules, and therefore you could certainly choose to execute this trade, knowing that you have a $100 risk per contract. Actually, if you get filled at 25, you have a $100 risk minus 25, which is $75 risk per contract. Okay. Anyway, everybody, the session is now complete. We just concluded today's session. Hopefully it went well on your end. Supply and demand trader, take care. Yeah, so everybody, you guys take care. See you soon, and I'll see you next week. Keep up the good work, keep up the practice. Send us your questions, and we'll get back to you. Ruben, I am 100% aware I owe you an email, and you'll get my answer very, very soon. It's just been really, really busy in recent times, but I have not forgotten you. So I'll be back, and anyone else, if you have any question, for sure, shoot us an email, reach@tradewithufos.com. Take care, everybody. Again, keep up the good work. Discipline in front and above everything. And we will see you soon. Bye-bye, everyone.